Homeownership has always been at the heart of the American dream.
It's freedom. It's like I get to do what I want with this piece of dirt and with this house.
A way to become financially secure.
It really is the mainstay of wealth building in this country.
But today, that dream is increasingly out of reach for many Americans.
The average house costs 5 times what the average income is for an American.
Homeownership affordability is at 40-year lows.
There is a crisis in terms of access.
We're looking at record numbers of households being cost burdened, which means that housing payments takes more than a third of their monthly income.
One of the things that really bothers lots of middle-class families is that their kids can't live where they grew up.
There is a crisis in terms of supply.
We have an aging housing stock in this country, and the ratio at which we're building new homes and new apartment buildings per the size of the population has fallen dramatically.
What are the implications for a generation of young Americans?
As homeownership becomes increasingly out of reach, America is at risk of losing its middle class. So what can be done to address the current housing crisis? While there's no shortage of ideas, a powerful solution may be hiding in plain sight. 2 institutions, whose names might sound familiar, wield enormous power over the housing market: Fannie Mae and Freddie Mac.
Fannie and Freddie are the fuel that motivated the housing finance system.
Fannie Mae and Freddie Mac occupy a unique space in America's housing system. Privately run companies created by the government and charged with a public mission. Their connection to government gives them immense privilege and influence, and their charter gives them a responsibility to make that reach count.
That gives Fannie Mae and Freddie Mac a tremendous amount of market power to set the terms, so they can really make it possible for more people to buy homes.
To understand more about how they work and how they could help the current affordability crisis, we have to understand their origins and why they were created in the first place.
Before the Depression, the homeownership rate in this country was well below 50%, and most homeowners had to put down like 50% as a down payment, and had adjustable rate mortgages.
Banks used the money from people's checking accounts to make mortgage loans, which were typically for 5 years. Since any bank's capital was limited to what they had in deposits, if too many people wanted to withdraw their money, the whole system would collapse.
The money's not here. Well, your money's in Joe's house. That's right next to yours. And in the Kennedy house, and Mrs. Maitland's house, and 100 others. You're lending them the money to build, and then they're going to pay it back to you as best they can. Now, what are you going to do, foreclose on them?
When the Great Depression hit, there was an enormous rate of foreclosure. So the government stepped in and created a set of mechanisms that would allow people to borrow with lower down payments and to do so with a fixed rate 30-year mortgage.
Fannie's mission was simple but bold: to make mortgage credit more widely available, and in doing so, help more Americans become homeowners. The idea was that strong homeownership would strengthen the nation. Here's how it worked. Local banks could make home loans, then sell those loans to Fannie Mae. That freed up bank capital so they could lend again.
Fannie Mae bundled all those mortgage loans and resold them to investors, which created this huge market.
For the first time, mortgage lending wasn't limited to how much cash a local bank had on hand. Capital could flow freely from Wall Street to Main Street, fueling decades of homeownership.
I own the house. Me, Giuseppe Martini, I own my own house.
Mr. and Mrs. Martini, welcome home.
It was a rival of the world. There wasn't another financial system in the world that looked anything like it that could compare.
Without Fannie, we would not have the long-term fixed-rate mortgage that we have in the United States, where mortgage payments are fixed upwards, but they are flexible downwards.
As the home appreciates, this steady 30-year fixed-rate mortgage helps create this financial stability in the household.
Decades later, as the housing market grew, Freddie Mac was created to bring more competition and liquidity to that same system. By making long-term affordable mortgages widely available, Fannie Mae and Freddie Mac helped turn millions of renters into homeowners, laying the foundation for the modern American middle class.
So this great explosion of economic productivity in America was shared by America's households, and the fixed-rate mortgage was part of that, enabling part of that promise to Americans that growth in our economy is not just for the elite, it's for everyone, and we need to assure that going forward.
After World War II, America's homeownership rates surged, primarily in the suburbs. The GI Bill, FHA insurance, and Fannie Mae financing helped millions of families buy their first homes. But that financing didn't reach everyone.
Fannie's portfolio is not representative of the U.S. It's representative of relatively high-income, middle-income white buyers.
Everybody worries about risk when you're doing lending. So we're going to shrink our market and shrink our client to look just like this.
Reaching what might be called plain vanilla neighborhoods where all the houses are similar and it's easy to predict risk. There are rural markets all over this country where there is very strong financeable housing stock, but it doesn't have the sameness and the predictability that you see in suburban areas.
It's not that there's more risk, there's more perceived risk because they don't understand it, and nobody wants to do the work to understand it.
Compared to the cookie-cutter houses of the suburbs, rural houses have been too varied, too cheap, or too old for Fannie and Freddie. Similarly, urban neighborhoods that are more racially diverse have also struggled to access Fannie and Freddie's loans.
There was a kind of anti-urban bias in the way they looked at loans. They preferred new housing over existing housing. So if you were in the inner city and you needed a repair, you couldn't get a loan. But if you were in the suburbs and you had a new home, you had easy access to it. So there you see the engine of inequality that the suburbanization of America meant.
As money easily flowed toward uniform suburban neighborhoods, rural communities and inner cities were often left out. Individuals who were denied homeownership lost the chance to build wealth for their families, and without that foundation, their children would have a harder time accessing homeownership as well. Because to qualify for a Fannie or Freddie loan, you have to fit a mold that may sound familiar: a sizable down payment, above average credit score, a maximum debt-to-income ratio, and a house in a neighborhood that Fannie and Freddie understand. These standards were designed to minimize risk, but in doing so, they also determine who gets left out.
What they decided is risky and not risky doesn't necessarily match the characteristics of the borrowers that need to be housed, even though they might be perfectly capable of paying their mortgage.
So in the 1990s, a question emerged. What would it take to prove that families who didn't fit Fannie and Freddie's credit box weren't actually all that risky? That question led to an experiment, a partnership between Self-Help, the Ford Foundation, and Fannie Mae, designed to test if access was the real barrier.
Mandy McGee and her cousin Pat Clay have a lot to smile about. They both recently purchased their own homes through Self-Help.
Fannie Mae would buy loans that were outside of its normal standard guidelines, provided that Self-Help was guaranteeing those loans to Fannie Mae by virtue of this fund that it had received from the Ford Foundation.
The result was the Community Advantage Program. Thousands of mortgages to borrowers traditional models had deemed too risky.
People of typically lower income, lower credit scores, and lower down payments. I mean, many of the borrowers put down less than 5%. Some of them put down 0.
The results spoke volumes. The borrowers succeeded, proving that when given the right loan products, families outside the traditional credit box could thrive. And with that, the evidence was there. It wasn't borrowers who needed fixing. It was the system. But just as those lessons began to take hold, the financial crisis hit.
The U.S. government has written another check.
And even though the crisis was caused by predatory loans, not safe loans given to low-income people like those from Self-Help, Fannie and Freddie pulled back on all programs to expand access.
They stopped being innovative and they stopped trying to look at the housing finance system and say, what is broken? What can we fix?
In the wake of the crisis, many mortgage lenders were at risk of going bankrupt. Understanding the importance of keeping Fannie and Freddie afloat, the government bailed out both institutions. With less competition, Fannie and Freddie's market dominance grew, allowing them to have an even greater role in determining minimum lending standards. They've regained solvency and stability, and in moments of crisis, that has mattered. During COVID, Fannie and Freddie offered forbearance to millions of homeowners, preventing what could have been another housing collapse.
Right around 2 million borrowers are now in the government forbearance program.
That safety net was proof of their power and of their public purpose. But as the affordability crisis has deepened, that same caution has now become a barrier. Their criteria haven't changed with the times, and the share of people who can meet them keeps shrinking. Without new innovation, they're not just failing to expand access, they're actively keeping more and more Americans locked out. Today, experts say it's time to nudge Fannie and Freddie once again, because the stability made possible by the public should now be used to serve the public.
What an incredible innovation to create Fannie Mae in the first place. That same innovative spirit could make such a difference in trying to address the affordability problems that we see today.
So what could Fannie and Freddie do to expand access to housing? For starters, they could think outside the box, their credit box.
If we could just get Fannie Mae and Freddie Mac to make modest adjustments to the criteria based on pilots, they could reach a lot more American families.
They could provide liquidity to the supply side of the housing market.
Things like lending money to buy and fix up a home, that could have a huge impact.
Fannie and Freddie could incentivize locals to provide more land for development and incentivize builders to provide first-time buyer homes through what could be a more affordable secondary market.
That starts to create stability in the economy locally. It creates an opportunity to build wealth for that family, and it starts to defuse that cycle of poverty.
They could invest in CDFIs, specialized local lenders already proving that safe, affordable homeownership is possible in every kind of community.
Men and women who work in CDFIs understand those communities and understand that we need to get out of this one-size-fits-all point of lending.
If Fannie and Freddie were able to make an equity-like investment into CDFIs, then we could make loans.
And allow folks that are working in the south side of Chicago or the folks working in the Mississippi Delta to figure out a product that works for them and get major returns that are both financial as well as community impactful.
The tools that built America's middle class still exist. They just need to be used more creatively now. A little innovation and experimentation from Fannie and Freddie could change everything.
Fannie Mae and Freddie Mac have taken small steps over time to innovate around issues of equity. What they need to do now is they need to be bigger and braver.
We have a generational crisis here.
This housing market just keeps getting more and more discouraging.
It is literally impossible to buy a house right now.
For Fannie and Freddie to meet the moment, they'd have to think really carefully about what their role should be in the market. Not how do we make a lot of money. It's whether or not we're actually driving capital in the right way to get the right people being able to buy a home.
Before Fannie Mae and Freddie Mac, homeownership was out of reach for most Americans. But when homeownership became accessible to millions, it didn't just build individual wealth, it built stability that rippled outward.
That got us to where we are today. And if we cannot sustain that rate of home ownership in this country, then that portends really poorly for the future of the middle class in this country.
As long as we have people who are struggling, we're going to have an economy that's held back. If we can have people adequately housed, fairly, in homes that generate wealth for the community, that invest back in the children through education, it's a cycle.
If Fannie Mae and Freddie Mac can return to their roots and help make homeownership affordable once more, they could help rebuild a country of opportunity.
We are not asking Fannie to do something that is outside of their purview. They have a charter, and that charter says they serve low and moderate income communities and individuals. It's a public purpose that they have, and they should follow through on it.
By expanding their credit box, helping finance new and affordable housing supply, and partnering with community lenders and CDFIs who already serve the people and places traditional markets overlook, Fannie and Freddie can fulfill the mission they were created for. They can do it without costing taxpayers anything, because the system itself is built to serve the public. The stakes are high. The solutions are clear. Now it's time for Fannie Mae and Freddie Mac to meet the moment and keep the American dream alive for the next generation.